So hi, my dear friends, how are you doing? So many of you have been asking us, sir, kindly do the RTP session and upload it on YouTube. So here we are, dear friends, Paper-6. For the first time ever, Institute has released an RTP. And surprisingly, if you see, the questions here are slightly different from the case studies that they have given here. So let us do. So welcome Tharun sir, welcome Chinmaya sir also. All of us will be handling this session. Sir, so initially this case study is about the steel industry, as you can see there. And they're just trying to tell you what all subjects they are testing. So they're testing financial reporting, direct tax, of course, corporate and economic law, indirect tax, advanced auditing, everything except SCMP. This question has everything. And in fact, case study one has SCMP also. We'll do case study one later. So now we are uploading case study two, my dear friends. And of course, topics also they have given just for you to have a knowledge as to what all is there. So 92C of the income tax act, there is transfer pricing. Then 188 of the company law, that is related party transaction, along with company board and board meetings of the board. And most importantly, guys, very surprisingly, they have also given a question on FCRA, that is Foreign Contribution Regulation Act. So those of us who are thinking that only company law portion will come, think again. They are giving questions on FEMA, SEBI, FCRA, and anything under the sun. So, and even PMLA in one of the areas, PMLA area also was touched upon. So you can never say that, nothing of these, only it is, rooted only to few topics, nothing like that. Anything under the sun can come. So with that, let's directly go ahead to para number one. I'll be reading it. And there are, I think, if I'm not wrong, 5 paragraphs. And based on these 5 paragraphs, there are questions. So let us read now.
Yantra 5 paragraphs are there. And paragraph 1, I will read, sir.
Yes, sir. Sure. Go ahead, sir. Go ahead, sir.
It's smaller one.
Go ahead. Go ahead, sir. Go ahead.
Yantra Pedasu Limited is an unlisted public company incorporated since 2005. So it's a public limited company, but it's unlisted, engaged in the steel business with 9 directors on its board.
Okay.
There is a company in Singapore named SYD PTE Limited, in which it acquired 54% stake during the financial year 22-23. So this YPL has acquired
SPL.
In SPL,
yeah.
And thereby became its first subsidiary company.
Yeah.
Mr. Sunil Verma has been appointed for the second consecutive term of 5 years as a managing director of YPL.
Yes, sir. So here I want to discuss few things, and then because there are 4 concepts here all put together, the 2 concepts quickly we will discuss. First is, guys, this is an unlisted public company. So unlisted public company, as you know, is a company in which the public holds shares. A private company is a company in which has only 2 people, minimum 2 people as the shareholders, and it can go up to maximum 200. Whereas public company is anything other than a private company. Unlisted means what? It is a company which has not listed its shares in the stock exchange. So basically, your institutional investors would have held shares here. That is one. Second part is number of directors on the board. So for a public company, there should be minimum 3 directors, but here there are 9 directors. It's fine. Minimum should be 3. So here it is 9 directors, no problem. Next, it has acquired 54% stake. So if you see the holding and subsidiary company definition, if you control more than half of the total voting power of the other company or control the composition of the board of directors, then it is called holding subsidiary relationship. As you can see, it has acquired 54% stake. So here we can assume stake means total voting power, and total voting power means it is the equity share capital they have held it. Then it has become its first subsidiary company. That's fine. Now, one more interesting point they are given. Mr. Sunil Verma has been appointed for the second consecutive term of 5 years as the managing director of YPL. So this we have to see the managing director provisions of company law, section 196 that is. So as per 196, you can be appointed as a managing director for up to 5 years at a time. Up to 5 years at a time. So you can be appointed for 1 year, 2 years, 3 years, up to 5 years at a time. After that, you have to be reappointed for 1 more term. So here they are reappointing him for a second consecutive term. So you can keep on reappointing him for any number of terms that you want, no problem. But you need to follow the provisions of 196, 197, Schedule 5 and all those things. So that is what they are giving. Actually, this particular information in the context of this question is irrelevant, but they can add many more questions to this. So you need to understand one thing, those of you who are watching us for the first time, we are not going to discuss only what is given in the question and answers here. We'll also be discussing what are the other areas that they can ask in the exam. So the context of this managing director, this person being managing director in the holding company is relevant only for the next sentence, which Tarun sir is going to read. Apart from that, it is not relevant for any other thing, but they can also ask other questions with respect to appointment of MD, etc., which in this question is not there. Yes, sir, Tarun sir.
Yes, sir.
Yeah,
So
let me also add, yeah, you want to add something or you can add, you're reading
I
from
want
there.
to add one.
You can add, sir, you can add, yeah.
Yes, sir.
So that is this YPL and SPL. These two companies, for the purpose of GST, they are treated as related parties. So because the same control is there even in GST, so even in customs also. So both as per GST law as well as Customs Act, these two parties are treated as related parties, and the transactions between them, transaction value is not applicable. So both
Okay.
under GST as well as under customs, and we need to determine the value in terms of rules. So whatever is the actual consideration that is involved in this is irrelevant. So we have some rules, like in GST we have rule 28, which talks about open market value, etc. And in customs also we have identical goods, similar goods valuation. So that will be relevant. And yes, sir. I think in FR also they
Yeah.
both treated as related.
Yeah, for also quite a few is there. When you said you read the first paragraph, no, one thing strike my mind, not related to this directly. Now they give you the open book exam, right? Where you can take the books. Of course, we are confused which books to take. Maybe in the future, they will allow one person, I think, who can take an expert for you and you can ask his guidance or you can ask him to read. Maybe you can ask him to ask questions. I mean, just if you foresee myself in this paper, what could be the possibility?
They
Okay.
can probably allow you a mobile to sort of check with AI, maybe, never know.
Yeah, maybe something like that. You search and then based on that, you may present the answer.
Yeah, and also in direct taxes, this would be called as associated enterprise for transfer pricing norms. Hence, here you are seeing an Indian company and a foreign associated entity.
Oh,
So
they're called as associated enterprise. Yeah? Because
enterprise,
in
yeah,
FR,
associated enterprise.
associate means different.
Correct. Even in company law, associate means different. It is where
Okay.
obviously you have more than 20% voting power.
Yeah.
So what is the in FR also? I think it's the similar lines. It's
Yeah, in FR, they don't use the particular definition. They just use the word control and they would the word a significant influence, which we interpret it as 50% for exam purpose at least.
Okay.
In reality, that may not.
And for associate, what is the percentage in my sir? Is
Yeah,
that
same thing. They don't
20%?
use the word percentage. They use the word significant influence.
Okay.
And again, based on our interpretations, past history, we usually say from exam, we say take 20% because of company law definition. But for FR, India's definition as such, they don't have any particular.
Okay. So here it's called AE, that is associated enterprise. So this will
Enterprise,
become associated enterprise. So basically we have company law, holding subsidiary relationship. We have customs and GST, as sir mentioned, there's a related party. Here also in company law under 2 clause 76 also it's a related party. Apart from that, for direct taxes purpose also it is a related party. Even for FR purpose also related party.
Yeah.
So
For
they
FR
can
purpose,
ask questions on anything.
Yeah.
Yes, sir. Sorry.
For FR purpose, I'll just add one more point because the word one used, even sir used, you also used, that is control. That is the single most word important after accrual in FR whole subject itself. Like for example, you say, right, if you talk about holding subsidiary, there has to be a control. If you talk about the Ind AS 115, where revenue from contract with customer, when you will recognize revenue, when the control is transferred. So if you go to definition of what is an asset, they say asset is a resource controlled by enterprise. They don't say owned by enterprise. So the word control is uniform across all Ind AS. So that is even in cases holding subsidiary also the word control comes.
But
so
in GST, control is not defined.
Okay.
Control is not defined, but they're telling one person directly or indirectly controlling the another is related.
Okay.
Now the control is ambiguous in GST. There is no definition both in GST as well as in customs.
Okay.
So that's where we depend on Companies Act.
Correct.
So Companies Act, and we say like there are multiple cases, even in old indirect taxes, excise, service tax also, where they say relying upon Companies Act, if investment more than 50% or majority board of directors.
Right.
So, but as per Ind AS, when you see control, so like because now even that is also there. There was one material, background material on GST released by ICAI. they are telling for control as per Ind AS, some 2-page information is given.
No,
So
no,
I
2 pages is
did not
very small.
understand.
No, they have series of case studies. Like forget about Indians. I'll ask you one basic question. I know
Yeah.
you'll not answer. You cannot answer.
Hmm.
In family, who is the controller, sir? Husband or wife?
Wife.
No, it's actually the
Many of our
husband
wives,
who
all of
decides.
our, each
No,
of
it
our
is the
wives seeing this, will they
no,
like they
it
like
is the husband who decide, but he has the permission of wife to say that.
correct.
So,
You're right.
so the definition of control is always juicy and dicey over there. But yeah, the definition of control is very, very ambiguous.
Today we are not
Except
going
company
home.
law. Yeah.
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 Right.
Everywhere else it is because series of things are there. Like, so we have separate discussion. Like in FR, I almost spend like 3-4 hours just on that one word on control. So
Control,
there
okay.
we take to the different level. Even
In company
institute
law, they have
has that.
defined control. They say that includes the, what do you say? It's an inclusive definition. Also includes controlling of the board of directors and stuff like that. It can
Yeah,
also
essentially,
be
who
through,
controls should be shown. That is the
yeah.
reason.
So there, it includes even not just any shareholding, what do you say, pattern, but also a shareholders agreement also as well, or management agreement also. So everything is included in the word control, and that predominantly goes through GST customs. Also, the same definition is used as sir also mentioned.
Yes.
I was not aware, sir. I thought, I mean, GST had a definition of the word control. I was not aware of this. They take it from company law. Okay.
The GST, okay. GST is new law. Customs Act is not there.
Customs also, okay.
1962
Interesting.
Customs Act. Immediately after Income Tax Act. But even in that, they have not given.
Correct, sir.
I just have one question to Punarvas sir. Since it is unlisted public company and they have acquired a foreign subsidiary,
Yeah.
should they do consolidation as per company law because it is unlisted public company?
Yeah.
I know
Yeah,
listed
yeah.
companies have to do, but for unlisted company.
That's what. So in consolidation, one was actually your, what do you say? Whatever as per SEBI regulations you have to do, but 129 is clear that you need to do even for that. That was a major concern that should I do it for joint ventures also? I have to ask you that question also because in company law they had told you have to do for associates and joint venture and all type of companies have to do. So I think there was some problem with Ind AS that did not include associate, right? Sorry, JV. Am I right?
No, they have included, maybe they have included even when there is no consolidation. I think that would be the situation.
Correct.
Which basically means earlier they said you have to include associate or joint venture only if you have a subsidiary, because this will come only in consolidated statements. But India said whether you have joint venture or associate or joint venture, you have to do a consolidation to include the respective related
So
parties.
129 is clear in that regard. Yeah. So
consolidation is applicable
yes.
under all the things you have to do. Okay.
So, sir, next I'll read only 3 lines. Others anyway related to us only. He has a daughter named Mrs. Sunita. It is Mr. Sunil Verma, who's the MD of the holding company, has a daughter named Mrs. Sunita, who's residing in Singapore since last 6 years. And she was appointed as director in SPL. Okay, so father is the MD of the holding company, whereas daughter is proposed to be appointed as the director of the subsidiary company during the financial year 23-24 at a monthly remuneration of Singapore dollar 60,000, equivalent to 3 lakh rupees. This is a monthly remuneration. So here this is interesting because as per 2 clause 76 of Companies Act, any director or the director's relative happens to be the related party. And here holding subsidiary company also is a related party anyway. And I am appointing a related party as a director in the subsidiary company. So they have an interesting thing under 188, section 188, subsection 1, clause F, that is called holding of office or place of profit. So it is interesting to know that the daughter here need not hold any office, though they have used the word office, need not hold any office or place of profit, because the company law has defined place of profit or office as purely whatever she's earning. So in this, they have told that she is becoming a director. Even if she is becoming an attender, I'm saying it doesn't matter as long as she's earning 3 lakh rupees. So here the crux of the issue is the money. So the company law says that under 188, if any of your relatives is earning something, and what is that something? Any remuneration is what 188 says, any remuneration. And then you will have to take the permission of the shareholders for this. And there is a threshold though. There is a threshold, and threshold is 2.5 lakh rupees. So let me just write down here. The threshold is 2.5 lakh rupees monthly remuneration. Monthly remuneration 2.5 lakh rupees under section 188. So if your related party is having any office or place of profit, I again repeat, office or place of profit has got nothing to do with office or a place. Designation does not matter. It's about the money. So if you are earning more than 2.5 lakh rupees per month, monthly remuneration, mind you, then the company, in this case, not the subsidiary company, mind you, holding company. Holding company has to take permission of its shareholders for appointing the managing director's daughter as a director in the subsidiary company. So that is one
Is it the
provision.
same for a foreign company also, even if the subsidiary is a foreign subsidiary?
Yes, sir. Yes, sir. That applies to all types of companies as long as it's a subsidiary, Indian subsidiary, foreign subsidiary, whatever. Holding.
Just to add, that remuneration, what is remuneration? So is it like gross, in hand, any
So
definition?
remuneration they have defined as everything that you can take except of course the year-end bonus, year-end other things. All year-end payments are not taken. Like your what do you say? Your performance-linked incentives and performance-linked bonus is not taken into consideration. Apart from that, any remuneration, again remuneration is defined in 2 clause 78. Anything that you can think of. So all emoluments, including taxable perquisites, non-taxable perquisites,
even share-based payments, maybe like if they have ESOP.
that is again a gray area because there was
Gray.
one case law regarding that. There are share-based payments, but then if you think about it, share-based payments is again linked to performance. So if you perform well, then you'll get the ESOP or
and
whatever.
it is uncertain also. So you will, and
Right.
even gratuity and all, you will not know at the
Correct.
time.
So they have just said monthly remuneration. So there was one case where this guy was earning 2 lakh rupees per month, but in the end they gave him some 15 lakhs bonus. So is that office or place of profit? The answer was no, because the law says monthly remuneration. So that is, I mean, though it's weird, but then you can still sort of break this law by just paying him less than 2.5 lakh. And in the end, you pay one bulk payment of 10 lakhs, 12 lakhs, nothing will happen. So that is one stupid provision. But nevertheless, there was a case law also regarding that. So that's the meaning of monthly remuneration.
Okay. So let me just cover the FR part also.
Yes, yes.
So because he's a managing director, he is said to have been the KMP, management personnel. The whiteboard, I think suddenly closed. You have it? Yeah. Okay. Yeah. So he's a managing director. So he's said to have the KMP. So he's a related party. So for the company YPL, which is the holding company, Mr. Sulin Verma is the managing director, and managing director is called as the relative for the related party for the purpose of Ind AS 24 related party, and it should be disclosed. Interesting point is YPL has got now subsidiary, which is SPL. Now the question is whether managing director is a relative of or related party of subsidiary company. Ind AS 24 said related party means KMP of the company or KMP of the parent company, ultimate parent company. So managing director is not only related to the holding company, and managing director is also related to the subsidiary company, and therefore managing director's daughter, which is also relative, and therefore she is also said to be the related party of subsidiary companies. So for the whole group concerned, they become the related party, and the disclosure requirements would follow.
Actually, there even in GST also, sir.
Yes,
it is like being father and daughter, they both are relative and they are related. So whether dependent or not dependent, spouse and children is always related. They will come under family. And director of a company and the company is also related. So if that be the case, Sunil Verma and YPL is related.
Correct.
Then his daughter is appointed as director. So director and SPL. So those also. So means it goes in line even under GST. So like how you said in FR. So even in GST also, all these four people are actually related.
Same 2 clause 76 also says the same thing, sir. The subsidiary company, for the subsidiary company, that company's relatives or director or the relatives, and even the holding company's director. So I think it's synchronized across all the three subjects.
So in this, there's one step extra further which goes.
Okay.
When they talk about definition of relatives, they say relative means spouse, understandable. Then they say children, understandable. And they say children of spouse.
Oh,
Step.
steps.
And they say domestic partner
Okay.
and children's of domestic partners.
So is that are they recognizing the live-in relationship in that
Those
case?
things, that's how the terms used in Ind AS 24. They don't
India's
tell-
came from, I mean,
Yeah.
of course, other countries, right? That's the
Yeah,
reason.
domestic
It is from
partner, all
IFRS,
these
so-
LGBT, everything will, everything
Yeah,
will.
that's how they use the word. So they never recognize, they don't use the word spouse. They just use, I mean, they don't talk about blood relation at all. They
Right.
only talk about these words because in those countries, the words like they tell like my child and your child is playing with our child. These are all very common terminologies there.
That's
So
why they
keeping
have
it in
Father's
mind,
Day, Mother's Day, and all that, because they have to figure out who's the
so
father, who's
that,
the mother.
yeah, so that they will
It's a
not
bad
forget.
joke, but anyway, that's the truth. Yeah. Anyway,
Yeah.
cool,
So
cool.
no, based on those topics, even in FR, they have not touched upon. I don't know. Maybe they can ask. So just be aware of those terminologies
I
being.
mean, then in that case, if live-in relationships are recognized, I mean, recently one of the cases I was seeing that even live-in relationship, you need to get a registration, like marriage registration.
Yeah,
That is
we need
also
to,
needed.
that's what
Okay.
Supreme Court recently said.
Supreme
You
Court
need,
has told. So, I mean, if you add that, all this, if you have a domestic partner or the related party, it's registered only means, domestic partner, it will become that. You link both. Anyway. So,
yes.
who knows?
So,
Good,
so
but
let's summarize this paragraph 1.
Yeah.
So in this paragraph 1, what we have seen is mainly related. So that related across all the subjects like FR, law, income tax, and GST and customs. So these two companies, YPL and SPL, are related, and
Right.
also director and the company is also being related. And mainly, Punarvas sir has highlighted something about managing director, so is appointed, not necessary managing director, any person that salary 2.5 lakhs monthly
Yes.
remuneration.
Yes,
So these
sir.
are the aspects. So guys, like whenever the paragraph gets completed, you take one note and you please write down what are the points that we have discussed in that. You just pause the video and you make note of these points and all, so that it will be helpful for you, because not necessary that this case study may come in exam, but in line of these case study with different questions may also come in exam. So that's why. So a holistic approach is required while preparing.
Yes.
Yes.
So
Was, I mean, just to give a thing, case study 12 and 13, which Institute has uploaded, 13 and 14, 12 and 14 actually. What was uploaded 2 months ago is different from what is uploaded now. Questions are the same, but I mean, the case study is the same, but questions they have changed.
Correct.
So guys like that, they can keep changing. So kindly be alert.
So when you are making a notes, one suggestion, don't make in a continuous paper, one after another. Try to make more structured one. One simple suggestion I can give you is, for example, you're doing for this, you have for, then you give one column for FR, one column for law, one column for income tax, one for GST, and mention the respective section number or whatever the brief points. So you divide the pages in a columnar basis, or if you're writing in Excel or something, you can do. So when you're reading it later, you don't have to read continuously. You read the word relative against law, against DT, against IDT, and against income tax or FMA or if something like that. So multiple columns you maintain. Under that, mention the respective elements. The two common area which I can definitely foresee is related to the related parties. And whenever the director comes, you will see that things are getting connected. So whenever the problems are related to directors, keep this extra point in mind. All subjects will come together and will haunt you later.
Okay.
Yes, sir.
Yeah. So let's move
on to paragraph 2, and para 2 is like a very big paragraph. Let me read, and Punarvas sir can explain in this.
Yes, sir.
For financial year 23-24, YPL appointed Chappan and Company as its statutory auditor in the place of its previous auditor. All the formalities as prescribed by section 139 and 140, sir will throw some light, and were complied with by YPL in relation to such appointment. Also, Chappan and Company made a written communication via a registered post acknowledgement due to the previous auditor before accepting such appointment.
Yes, sir. So,
yes, sir.
yes, sir. So here, this is the talking about appointment of the statutory auditor in place of the previous auditor. So guys, when generally each auditor is appointed for 5 years, as the new law suggests, that is in 2013 which came. The concept of rotation is also there for listed companies and some other unlisted companies as well. So here let's not talk about rotation because the question does not talk about it. But in case they ask also, you can think about the rotation aspect. Either way, even whether rotation is there or not there, even for example, even for a private company where rotation is not applicable, every auditor cannot be appointed for any number of years like it was there in the previous, before 2013. As of 2013 law, every auditor or audit firm has to be appointed for a maximum period of 5 years. And it is not up to 5 years like we saw in MD. MD can be appointed for 1 year, 2 years, 3 years, but statutory auditor has to be appointed for 5 years at a time. 5 plus 5 plus 5 plus 5 like that. But if rotation is applicable, then it's different. So here what has happened is generally you can replace an auditor after 5 years. So maybe they did not like the previous auditor. So YPL has appointed this Chappan and company as the new auditors. Now, when a new auditor is being appointed, Chappan and company has to do certain things as per auditing, as per professional ethics. One, they should ensure all the formalities of 139 and 140 are followed. So what is 139 and 140? First of all, the previous auditor, you need to ensure that he has been, if he is removed, they have not given whether they have removed or not. So if it's removed, then all the removal provisions of 140 subsection 1 has to be followed. The special resolution, central, that is regional director's approval, all that you need to check. In case he has not been removed, so 140 subsection 1 removal is removal before expiry of the term. So I told you, you can appoint for 5 years. Before 5 years only, if I have to throw out an auditor, let's say first year, second year, third year, then I can go to 140 subsection 1. On the other hand, on the expiry of the 5th AGM, that is 5 years, on completion of 5 years, if I have to remove an auditor, that is removal on expiry of the auditor's term, then I have to go to another section called 140 subsection 4. So in this question, they have not given whether it is removal before expiry or removal on expiry. So you can expect questions on those lines. If it is removal before expiry, and if they give you a theoretical question as to what the new auditor should do, I should write the provisions of 140 subsection 1. If it is removal on expiry, then I have to follow 140 subsection 4. So all the entire procedure is there. You have to give a special notice and all those things. So special notice has to be given, not earlier than 3 months, not less than 14 days. Those are the formalities. All the formalities means that only. Assuming it is removal on expiry, the old auditor completed 5 years and Chappan and company is the new replacement. Then I have to pass that special notice asking to replace this auditor, and the new auditor should come. He should ensure, he should also, as per auditing, you should also, professional ethics, you should take a NOC, no objection certificate. And that NOC, even in one of the case studies, there was a thing, can you send an email as an NOC? No, it should be a written communication and you should give proof that you have sent. So what is the best way? That is RPAD, registered post acknowledgement due. In RPAD, what happens is I will send you the post along with an acknowledgement slip where the receiver will sign on it and send it back. So the postal department will hand over the acknowledgement to you. That is proof enough, evidence in the court of law also saying that you have actually sent it and he has read it. Whether he has read it or not, I don't care. But I have the acknowledgement with me, which means he has read. So all these things, Chappan and company has to take care. Otherwise, the best part is Chappan and company will be liable for professional misconduct. So they will have to bear the brunt of not sending the NOC, etc. So in this question, they have given like that. And now the new guy, Chappan and company, how will they be appointed? They will be appointed by an ordinary resolution. So the board will initially propose, and it will go to the audit committee also, if at all there's an audit committee. And then they will come to the shareholders in the meeting, in the annual general meeting. And by passing a simple ordinary resolution, the Chappan and company will be appointed. Even the resolution notice has to be given on time, 21 days before the meeting. All these things Chappan and company has to follow. That is the meaning of all the formalities as prescribed by section 139 and 140. All the formalities, those are the formalities. In this question, nothing of the sort has been given. So whatever I told you now in this question is not there. But they can change the question and they can give you other questions. You can write down what are the formalities to be done, what is the professional misconduct points, what will happen if they don't do all these things. Those are the other questions that they can come. So this is the thing, sir. They have not given any question on it, but these are all the items that we can take care of.
Typically for financial year 23-24, they have to be appointed, means it would be in the AGM of 20 to 23, right? It would be in the...
No. And for the financial year 23-24, so AGM will happen, in September 24.
But the AGM for appointment of director has to be previous year, no? It is for the financial year 23-24. So
Correct.
they have to do the audit. They have to be there at that time. So in the previous AGM, they would have appointed for the financial year 22-23.
Yeah, you're right.
If they have to audit 23-24, like in the
Correct.
AGM conducted maybe in the month of July, August 23, they would have been appointed.
Right,
Typically,
right.
that would
You're
be.
right. Yes, because obviously everything you have to do the audit, etc. by end of 24 March means by April, May you should finish the audit.
It should start. So they would have
Start.
appointed prior to that. So
Perfect.
in case if some question is asked, like date of sending the notice, those kind of things, if they are
Good point.
mentioned,
Yes.
yeah, they have to keep the.
But the AGM of that first AGM for this Chappan and company will be September 24, where they'll
Yeah,
be
that is where they submit their audited report.
audit report. Perfect.
Yes. Correct. Yes.
Yes, sir.
Next part in this, CA Kailash Chappan, one of the senior partners of the firm, was appointed as the engagement partner by Chappan and Co. on such audit assignment of YPL. While conducting the audit of YPL, CA Kailash observed that there were certain accounting estimates made in relation to certain items of financial statements that might give rise to significant risks, and thereby he performed substantive procedures in accordance with the requirements of SCA 330. That is the auditor's responses to assessed risk.
Correct.
Related to the audit.
Yeah.
So, yes, sir.
Yes. So, sir, basically, first of all, the auditor has to plan the audit. And then, of course, he should assess all the risks. So, all that planning, assessment of risk and acting on those risks is covered in SA 300, 315 and 330. So, after checking the risks, whether, the internal controls are strong and the other things are covered or not, he will now check the estimates. Like, for example, a simple example in an insurance company, the best accounting estimate will be done by your actuary. That is your actuarial valuation. Simple words, how many people will die this year? Next year, how many people will die? What will be my outflow from this insurance company? What will be my outflow? So that is a simple accounting estimate that they have to do. So now think as an auditor, I have not studied actuarial valuation. Actuarial valuation is considered one of the toughest in the world. Am I right, Chinmay sir? I think you had also.
I wrote the foundation, the entrance exam. Then I thought the result will come. I have to search for website. They simply send an email telling please find attached list of people who passed. If your name is there, you proceed to next level. Otherwise, try again. So it is in those very few hundreds actuaries will be there, and more often than or not, before you even complete the actuaries, you will get some job offer and you end up doing those. So
actually, if I'm not wrong, there are 15 papers, 16 papers, just to digress in that. Even if you do 7-8 papers also, you'll get an excellent job. Because
and I after passing the foundation, I ordered one book. Then it is still there. I'm not looked afterwards.
But so if I'm not wrong, there are just around, maybe 7,000-8,000 actuaries in India. That's it. It's a very. Correct. So now, why I told you all this, now I am an auditor. How will I know how many people will die? That is something that you will know. You are an expert in maths and statistics. So you have made an estimate. Now I should check whether that estimate is correct or not. How do I check it? So I need to speak to the, the expert there, the management expert, and expert here will be the actuarial valuation guy. And I have to speak to him and saying, sir, what are the assumptions that you have made? So I'm giving my practical experience because we were the auditors of MetLife. There was MetLife that time, and ING Vaishya as well. 2 insurance companies we audited during my articleship. We were the statutory auditors. So I personally learned a lot there. So there was one actuary and all others, as Chinmaya sir told, I just finished around 7-8 papers, but that lady had finished all the 15 papers. She was the main actuary. So I remember the discussion with her and I wanted to understand, because I remember this essay really well, because I sat with her and said, Madam, please tell me what are the assumptions that you have made. So she gave me an Excel sheet which had pages and pages of data, and for the life of me, I couldn't understand those calculations. So I had to go to her and find out. So then I came to know they check something called as mortality rate. That is the rate of death in India. So during COVID, the mortality rate was higher. So obviously there the provisioning should be more. Then the morbidity rate, the rate at which in India people get diseases. So that depends on demographics, geographical area, and many, many things, very, very complex things. Now, as chartered accountant, as an auditor, I will not get into how she did the calculation, but I will get into the assumptions. So basically, as per SA 540, what I need to really check I have to based on the first I'll do the risk assessment, and my entire audit procedure will be based on the assumptions. Is my assumption, I have a set of assumptions, are they matching with the management assumption? And what other alternative assumptions you have made, and what are the most significant assumptions that you have made? And more importantly, I should only check the reasonableness of those assumptions. So generally, if the mortality rate is there, you can get this data from the Statistical Research Institute. There, the mortality rate they've given as, let's say, 30%. But this lady has taken mortality rate of 67%. Is it reasonable or not? That I should check as an auditor. So basically,
I'll just add one point to that.
Yeah.
Because they use the word accounting estimate, and this
Yes.
Ind AS is
I
full
wanted
of
to ask
estimates.
Correct.
Yeah,
correct.
about 80% is based on estimation, because the one word called as fair value, where they do present value of future cash flows. So the moment you talk about present value, so many assumption kicks in, be it from the amount of cash flows, or simplest thing being discounting rate.
Okay.
What should be the discounting rate to be taken? Should
Correct,
I take the FD rate? Should I take the stock market rate, or should I go for AFM and do the CAPM model discounting rate? So those
Right.
kind of assumptions, yeah, definitely there will be a lot more to be tested out.
No, very good. So basically, that's what I'm trying to tell, that the estimates will vary from management to management. So I need to do two things here. They have not given in the question, but two other things. One is collect the management representation from them, telling them what all you have done. That is SA 580, collection of management representation. Apart from the written representation, apart from that, I also need, if at all I am not very happy with this particular valuation, done, I can get my own valuation done from outside, just to check whether the assumptions taken are reasonable or not. So that is using the work of an auditor's expert. So management expert is that lady who is employed. So if I am not happy with the assumptions, I can hire one more actuary outside, and I can compare their assumptions, whether it's correct or not, and give a proper threshold. My entire basis of materiality, which is there in the next para, which is say 320, depends on this. Sir, if you don't mind, I'll read the next para and then I'll connect it.
Before that, one small question.
Yeah.
They use one word called as substantive procedures. So
Right.
would you like to throw on that, like what
Yeah,
is
yeah.
the difference?
So
in substantive
basically, it
procedure?
is your entire sampling technique, materiality, and the entire audit procedures. So, for example, there are two things. One is compliance procedure, one more is substantive procedure. Just to throw some light, compliance procedure means what? Like, for example, if you go to an ATM, now I'm throwing this question to Chinmaya sir only. If you go to an ATM, what according to you should be their internal controls to ensure that cash is not stolen? Very simple question. So what according to you should be there?
The password management, it should connect to my card number properly.
Correct.
That there will be securities outside.
Security, right?
Cameras
There should be a CCTV. That's all. Simple.
Yeah.
Those are called compliance procedures, internal controls, whether the internal controls are there or not. Substantive goes to the next level. This is not about
Okay.
internal controls. Here I'm talking about whether it is being recorded in the system properly, and whether there are sufficient checks by the management to ensure that there is no defalcation of cash, embezzlement of cash, mismanagement. All these are substantive procedures. So
Okay.
when I'm doing my planning and risk assessment under 315 and 330, this auditor's response only is that first is I will base it completely out of my compliance procedures. That is the strength of the internal controls. And then I will base my substantive procedures based on the strength of the compliance procedure. So let's say the company does not even have a very good internal control system at all, or internal auditors are weird. They do not give reports properly. So then I cannot rely on them. So what I should do is I should do my own set of compliance procedures to ensure that the internal controls are in check, and then move on towards substantive procedures. So these
So
are
can I
things.
say substantive process something like this? Check all the transactions where invoice is crossing 10 crores, something like that. Or can I say, I would like to verify all the transaction that took place on last day of the month, because in my
Yes.
experience, what I've seen companies,
Hmm.
they want to show report to the venture capitalist fund, the management, they want to show they are achieving their targets. So on
Correct.
31st, they show more sales, and 1st of next month, they reverse it.
Correct.
So actual cash flow is not happening. So I have observed that on 31st of every month, there has been spike in sales.
Hmm.
And on 1st of every month, there is a return spike. So
Correct.
maybe these kind of substantive procedure one can observe.
But whatever you
beyond the
said,
line.
Chinmay sir, is a substantive procedure with materiality. Because when
With
you said
materiality,
above 10 crore, you have used something called materiality, which is given as SA 320. So we will use the materiality and then done the vouching, verification, etc. That is substantive procedures. Whereas checking the internal controls. See, even for example, if I am just keeping a bundle of cash of 10,000 rupees on my table and I just walk out, or let's say forget about 10,000, 10 rupees on my table and I walk out, somebody can come and take that 10 rupees and go when I'm not there. Is the money to material? No, but there is a lapse of internal control here. So internal control doesn't look at compliance procedures, don't look at materiality. Compliance procedures look at the lack of procedure here, lack of controls. So today it can be 10 rupees, tomorrow it can be 10,000, day after tomorrow it can be 1 lakh. There is definitely a problem with the control here, right? Whereas substantive procedures on the other hand is more of your vouching and verification. And along with that, I have to assess the risks based on the assessment of risk which they have given in the question 330, and then go to what? Materiality. My entire, if everything is strong enough, my materiality level will be, okay, let me say 10, as you said, more than 10 crore I will tell. If I feel I'm not very comfortable with the internal controls and I feel that I should lower my materiality level, I should see transactions more than 10 lakhs and not 10 crore. So it all depends on the assessment of risk and how I respond to those risks. So that is what they have given here in this particular question. That if you see, there are certain accounting estimates made in relation to certain items of financial statements that might give rise to significant risks. So he is not very happy with the assumptions that the management has made. That's why he's performing more substantive procedures in response to essay trigger.
Can I say like this, when they say that might give rise to significant risk and risk about him forming an opinion, that's the risk they're talking about going wrong, where he might give a clean report, but there might be some issue there. That's
very good. Perfect. That is always the risk. That is always the risk. So based on that, he will have to do the materiality, which is the next para. So I'll just read that. So further, CA Kailas determined that there are certain factors that indicated the existence of certain transactions entered into by YPL for which misstatement of lesser amounts than materiality for the financial statements as a whole could reasonably be expected to influence the economic decisions of users taken on the basis of the financial statements, and accordingly, Kailash has lowered the materiality level. So, as you said, there may be a lot of transactions in the end of the year, maybe small amounts. In isolation, they may not be material. But if I add everything together, definitely it will be a huge amount, and it will definitely probably change the way the economic decisions of users are taken, because I may give a clean report, but ideally I should have given a qualified opinion. So this materiality check has to be done. For example, related party transaction. You are my related party, I'll give you 10 rupees. Rupees, I mean, as far as amount is concerned, it's nothing. But if you see the materiality here concerned, it is my related party. Today it can be 10, tomorrow like that, I can give it to many such related parties, and then it will be significantly material. So remuneration to managerial personnel, remuneration to audit committee, because audit committee is looking after the governance mechanism of the company. If I'm giving some extra payment to them, amount may be very less, but will it result in them giving a bad decision? Something which will impact the users of financial statement. That is ultimately the stakeholders is what I need to see. Then, of course, I'm in a normal company and I've done a lot of R&D this year. R&D amount may be less, it may be huge, whatever, but have I disclosed it very clearly in the thing? And I may have taken over a very small business. It may be immaterial. I'm a 10,000 crore business. I would have taken one business for 1 crore. But is it significant in such a thing that it's a newly acquired business and it will have far-reaching consequences in the future? To give an example, Reliance around 9 years ago only, they bought a company which was only into manufacturing sodium. So the company itself was manufacturing sodium and it had around 70-80 patents already. And Mukesh Ambani bought it for peanuts actually. Today, that company is valued at such a great scale because lithium ion, now EV, electric vehicles, lithium ion, everybody is using lithium ion. Lithium ion is scarce product. It will go away in a few years. The only replacement of lithium ion is sodium. So this guy had the vision 9 years ago to buy that sodium company which had 94 patents or something which in sodium technology. He's already acquired it. You see in the next 10 years how things will change. Lithium ion will deplete and sodium. So at that point of time only, even though I have bought it for peanuts, I should disclose it separately. So all these things, the amount, who will decide? auditor will decide to check. So misstatements of lesser amounts in isolation, it may be nothing. But in if you aggregate everything, it may be huge. So that auditor has to check. Now, how much percentage, etc., nobody knows. That is why we have a concept of professional judgment. In our SA 200, they only clearly mention professional judgment. It is based on your judgment and your judgment alone, nothing else. So your judgment, you feel I have to lower the materiality level, I have to do. So
And
these
they
two
use the word
questions
something
are
like persuasive evidence and not a conclusive evidence, right? That's
correct.
how they use
Perfect,
the word.
perfect. So it's your evidence that you're collecting also is persuasive because it is dependent on various factors like your professional judgment. Now, that is the reason why NFRA is coming now, National Financial Reporting Authority. They are telling your judgment only is wrong. Like you're not even checking the basic stuff. I will not penalize you if you had applied that professional judgment. But if you have not applied, then that is what it is. That's what they say. So all
Yeah.
audit related stuff, guys. So it's
Yeah, I'll
important.
just add one point because they have defined the materiality here, which is the definition as per Ind AS also, but they've changed recently a small thing. So if you read this sentence, they say materialities which could reasonably be expected to influence economic decision of the users,
Correct.
which is what they have used it. They have slightly modified in Ind AS 1. They are
Okay.
calling it as information is material if omitting, misstating, or obscuring it could reasonably expected to influence the decision of the primary users. So they've used the one word called primary users,
Okay.
and they've used the word like omitting, misstating. So if you choose, if you forgot to show something, or if you by knowingly show you different amounts, so those are all coming under the definition of materiality. So from exam point of view, it may not mean much, but because for you to solve FR, they'll give you a question, you will solve it. But you should be aware of this amendment that are taken place as far as Ind AS 1 and IFRS 1 is concerned.
That interesting word,
Change the
obscuring.
ordering.
Obscuring
Yeah.
also is the same thing, that
Yeah,
hiding.
you decide like window dressing or whatever people call it. Like you choose not to show them purposefully, knowing the fact that some data was known to you earlier. So those kind of words they have introduced. So it may not mean in exam, but it will definitely have impact in the real life when you prepare the financial
So
statement.
primary users will be shareholders and creditors, right?
That's the definition not given, but primary will be for the users, will be shareholders, and I think the government, where the taxation would be considered over there. Yeah.
So
One more small example I'll take. Again, small, slightly different thing. You may also give your opinion.
Yeah.
So if a company sells goods at 100 rupees, but to acquire customer, they're giving a discount of 40 rupees. And they're selling at 60 rupees. Now the question is, what is the turnover of the company? Is it 100 or is it 40?
100.
100 only. Am I right?
But they're giving discount, no? But when you give discount instantly, they're not collecting the money.
Trade discount sort of a thing.
Trade discount kind of thing. But what they're doing is they were paying on 100 GST, and they're add a GST 100 plus 18 minus 40 rupees.
GST purpose, it is 60.
No, they were paying GST also. The company what I'm trying to talk about.
Oh, they are paying
They're
GST.
paying 100 on that 18, then 40. Because the reason why they're not, first, they were not aware of the law. Second, they could show more sales. No, they can. These are the initial companies. They can say valuation I can get. They can do PE valuation. I'm making more sales. My growth is happening. Then we have to convince them that it is not the case. You have to show only at 60 rupees and you get the benefit of GST on discount also. So those are the risks that you might have taken. So when you go and check, when they give you tally report, SAP report, just don't blindly take them. Look at these possibilities. Are the discounts shown at net basis or gross basis? And is there a policy behind it? And these are all the risks which could be significant, which Punarvas were mentioning earlier. You can also give these examples, especially in auditing paper when you're writing in examinations.
Interesting.
Yes.
Yes, because actually what Punarvas sir said is, isolated if you see it may be a small amount.
Yes.
But comprehensively when you see overall, so this is going to become a big amount. So yes.
And even accounts wise, we have something called as contingent liabilities, where it is yet to be decided. For example, for Delta Corp, GST case happened, right, for the gaming, which
Yes.
couple of months back. The amount of notice what they received is more than the market cap of the company.
Company.
So if they have to make a provision, company value would be negative. So those are the significant risks which whether they're provided or not, we have to check.
Perfect. And also your all is online gaming. Recently in the previous budget, they brought it under the tax net also.
Correct.
So all the earnings from your online gamings, your all
So
your
that's what even
Dream
even
11.
Dream 11 got some 40,000 crores.
40,000 crore, yeah.
Yeah.
Whoever is associated with BCCI, everyone counts up. Paytm,
Yeah.
Dream 11, all those things.
That's curse, I think.
Curse it, BCCI. Yeah.
Yes.
Yes.
So
So Chinmay sir can read the next two paras
Yes,
because it's related to GST and Tarun sir.
Yes.
I'll read it and Tarun sir
Yeah.
will explain. So apart from conducting the audit assignment, Mr. Kailash also used to solve the concerns raised by the accountant of YPL with respect to GST and income tax matters. One such concern raised by the accountant to him was the respect to ITC availment and the GST, which is briefed as under. I'll read that part also. The balance of ITC is not the ITC limited. It is input tax credit. They can use the shortcuts like this, but I don't know whether we can use in exams. The balance of ITC with YPL after discharging of GST liability for April month was rupees 60 lakhs. Eligible ITC reflected in GSTR 2B with respect to May month of YPL was 56 lakhs, whereas input tax paid by it on the invoices received during the month of May was rupees 75 lakh, and the output tax liability for the month of May was rupees 110 lakhs. So he was not sure about the amount of ITC to be availed for the month of May, for which he consulted CA Kailash, and after following his advice, GST liability for the month of May was discharged by YPL fully through the balance in electronic ledger, electronic credit ledgers only. So I'll give you a suggestion for this. So take the suggestion of Tarun sir. So you take it.
Yeah. Right.
So actually here there are multiple aspects which I wanted to explain one by one. First one is section 41 read with rule 36 sub rule 4. So what does it says? Previously, when Arun Jaitley has given ITC, like the concept of GST was so nice. So what they said is that a seamless flow of credits, like whatever you buy on that you pay tax, you take that and adjust against the tax that you need to pay in future. This is how it started. And thereafter, many people have misused this provision, like whether they paid the tax or not on their purchases, they made a fake invoices, like they have procured it, and whims and fancies, they entered the numbers and they availed the ITC and all. Then the next thing that came was the matching. So whenever you are taking the ITC, that should match with the supplier's liability. So if it is not matching, then you cannot take ITC like that. Then they have brought in the concept. And at that time, initially what they said is that, okay, if your supplier has made a mistake, it's okay, no issue. Whatever is matching here refers to whatever ITC as per your invoice should be paid by your supplier in his liability. So that is matching. So even if it is not matching, we are giving you 20% allowance. You take the extra credit. Gradually, Chechi came, like Nirmala Sitaraman came, and so she reduced it to 10, then 5, and now in this rule 36 sub rule 4, only matched ITC can be availed.
Okay.
Only matched
0%. No deviation allowed.
No deviation, no error, nothing. So now, why it will not match? 3 reasons. Reason number 1, my supplier has not filed GSTR 1. So GSTR 1 is a return which will be filed by the supplier. From GSTR 1, the data will come in GSTR 2B. So GSTR 1 is not in my hands, my supplier hands. And GSTR 2B, that is as a recipient, so I will get only 2B. Whatever
it will be filed by 10th or something, right? By GST on
yes.
it will be filed by 10th.
GSTR 11 will be filed by GSTR 11 will be filed by 11th of next month.
11th, okay.
11th of next month. Whereas GSTR 3B we will get it, 2B we will get it by 13th of next month.
Okay. 2 days they will take it for processing. Okay.
So yes. So by end of today, like 13th, we will be getting this. So this ITC in 2B, whatever is there, that much only I can take. Now, why will there be a difference between the ITC as per my books versus ITC as per GSTR 2B? Because my supplier has not filed GSTR1 on time. That is by 11th he should have filed. If he has not filed by 11th, if he filed it after 11th, this will come in next month to be. So not, for example, January GSTR1 he should file by 11th of February. If he files on 12th February or 13th February, etc., it will not come in 2B of January, it will come in 2B of February, which will be made available to me in March. The reason number 1, supplier not filed GSTR1. Reason number 2, supplier filed GSTR1 on time, but he did not report my invoice, that is whatever I purchased. He missed. Reason number 3, he filed GSTR1 on time, he reported the invoice, but that invoice information is wrong. Maybe I purchased for 10 lakhs plus 18% GST, he showed 10 lakhs plus 12% GST. So because of which there will be a mismatch between whatever ITC that is there in my books versus 2B. So here what has happened is that input tax credit paid by it on invoices received during the month of May was 75 lakhs. Means based on their books, input tax credit was 75 lakhs. But what was reflected in 2B for May month was only 56 lakhs. Which means how much can be taken as ITC? 75 or 56, only 56 lakhs.
56 one, correct.
Then this remaining difference, what will happen? So we
will be carry forward.
not carry forward. First, we cannot take the credit.
Gone.
Take the credit. Now we need to appoint one accountant or the bonded labor in the audit firm, and they will be doing follow-up. So they will call the suppliers. Say, for example, I am the client. So article student will be appointed for my work. He will call my suppliers and ensure that they are filing GSTR1. And sir, it goes to what extent, So they will ask my suppliers login details and they will add the invoices.
I will only do it. You don't worry, basically.
You don't worry. So article students' life made hell because of this. So now, because they cannot afford the accountant, because accountant salary you have to pay 15,000 rupees at least.
Our fellows 2,000, 3,000.
2,500, 3,000 rupees. So anyhow, we have cheap labor. So using the cheap labor, we can make use.
Sir,
So
that's actually, I see differently. Sir. That's a business opportunity for the article to practice after passing the examination. You can do a client relationship.
Correct. So therefore, these people will be daily, literally like how customer care call supplier's accountant. And we will ensure that this difference gets reported in GSTR1 so that we will be getting it. Because it's a huge amount. 75 versus 56 lakhs is a huge amount.
Correct.
Therefore, the client will insist.
But in the accounts, I would have shown as input credit.
So, accounting, the 75 lakhs is shown as asset, input tax credit. But really 56 lakhs is only the input tax credit. This we need to reconcile and show at the end in annual return.
So auditor would have gone mad comparing these two if you don't know how the GST works. Okay.
So that's where on annual return and all they have removed for up to 2 crores. If your turnover is up to 2 crores, you don't have to file annual return because this is like Herculean task, invoice to invoice mapping, softwares and all we need to install. Even then it will not work because these softwares will sometimes not properly match because
correct, exactly. No, for even alphabet missing, they'll put that slash, hyphen.
Correct.
While typing, they would have put one space.
Because technical guys will not understand what we need. They develop software. In that software, they keep a number of validation tools. So this is the challenge. So here in this case, for this person, because they asked one question. So they are not sure about the amount of ITC to be availed for the month of May. So only 56 lakhs can be availed for the month of May, but not 75 lakhs. And one more question is this. GST liability for the month of May was discharged by YPL fully through its balance in electronic credit ledger only. So here if you see, already some opening balance was 60 lakhs.
Correct.
Already opening balance was 60 lakhs. And now as per this rule 36B section 41, we can take only 56.
Yeah, total we get 116.
So therefore 116 lakhs is the input tax credit available.
Their payable is 110, I think. Yeah.
Their liability is 110. So their question is correct. Sir, I have 116 lakhs. So I need to pay 110 lakhs. Can I use fully my electronic credit ledger? Now, again, there is one more rule which has restricted this. Rule 86B. This rule
This is not crime, sir. This is cruel.
cruel. Now, I'll tell you what cruel I'll tell you in this. Rule 86B came during COVID. Actually, what happened before COVID, we made lot of purchases. Everyone made purchase regularly thinking that there will be sales. But COVID came out of surprise. February 2020, March 2020, COVID came out of surprise. Now, what we did for 6 months, we clapped, light the candle. So this is what we did. We didn't do any.
And the vessels, yeah.
Vessels and all, we clapped. So we didn't do any economic activity. Thereafter, after 6 months, what has happened? Slowly they gave relaxations, like morning 2 hours you can open, evening 2 hours you can open, like that. And now what has happened? My credit was high because I have made huge purchases. My credit was, but my liability will be small because I'm not making that much of sales. Now, using my credit, I will wipe off my liability naturally. If I do that, there is loss of revenue to the government. In a sense, like government will not have cash inflow. Because credit I took and I adjusted here, so there is no cash inflow. Already government spent huge amount on COVID relief, and now they don't have funds. So to create the cash inflow to the government, they brought this rule 86B, and they are telling out of your gross liability, you pay 1% through cash ledger.
Okay.
Even though you have sufficient balance in the credit ledger.
This is like almost begging, sir. Sorry.
Begging,
This is
no,
almost
demanding.
begging.
I used to tell the same. It is almost begging. So, yeah, give 1 rupee, please, like that. So 1% of the gross liability they are collecting from cash ledger, even though I have sufficient balance in input tax credit. So this input tax credit to take itself, how much challenge I had. So I need to match, then only I take. This 56 lakhs is my money, my bloody money. But to use this money also, there is a restriction, like 1% I have to pay through the cash ledger.
Sir, that rule is still there, sir. Even after COVID, they could have.
Exactly.
No.
This is criminal. This is cruel. You brought it. There is a reason to bring it. But what is the reason to continue it? So,
there's like this one more cruelty was there.
Those who are listening to this, don't comment. Tharun sir is against BJP. There is nothing here related to BJP or Congress. So even if it is Congress or BJP, the fact is fact. And policy which we are talking about. So I'm not taking sides. I'm just explaining the scenario, what is happening today. Why traders are getting affected is what I am explaining. I am talking on behalf of traders. And of course, because of this, I will not get claims also. So I'm just telling.
That's what, sir. Otherwise, that's a very sensitive. The people will tell this fellow is right, left, center, and all that.
So I'm neither left, center. I'm not Indian also. Leave it.
No, we are Marxists, sir. We Marxist. We believe in Marx. We want Marx for students. That's all.
Oh, that Marx is good.
Not Marx, yes.
Then they'll tell Karl Marx and that.
Yeah. Not communist, not that. So we are talking about this. So coming back to this, cash.
Just to add, because you told that thing, not directly but indirectly, when the stock market transaction happening for long period of time in India, capital gain tax was not there, neither long term, not short term, especially long term. So they have introduced this concept of STT, security transaction tax.
Correct.
Basically because capital gain tax was not there. Now you have short term capital gain, you have long term capital gain, you have STT also.
Correct. That's the fun in India. To bring a law, there is a reason. But to continue the law, there is no reason.
There's no reason.
Because the opposition should be strong. Opposition should speak something they need to understand. If they are not understanding anything, what we can do. So here, this is a fate of traders today. So this example literally suits here. Even though they have 116 lakhs, but they cannot use entire 116 lakhs to pay 110 lakhs, which means 110 lakhs into 1%. What is that? 110 lakhs into 1%, 1,10,000. They have to pay by cash, and remaining amount only they can adjust from the credit ledger. Yes.
Gross amount, not even net amount. Okay.
Yeah, gross 110 lakhs.
Is even more higher.
But this is applicable not for all, only for those people whose monthly turnover exceeds 50 lakhs, which means annual it is like 6 crores. Mostly majority are covered. 6 crores are easier nowadays. 6 crores turnover. We are talking about 200 crores, 300 crores, lakhs of crores. So this monthly more than 50 lakhs, it will be applicable. Who knows? Lot of CA faculties in North are crossing this turnover of monthly 50 lakhs. So we should also cross, sir. Guys, with your blessings, we will also cross sooner. So touch wood. So therefore, this way, if monthly turnover is more than 50 lakhs, for them only 86B is applicable.
Okay.
So just one more small thing, not directly related. These construction companies, when they especially sell it to the individual people, they used to ask, do you want with invoice, without invoice? Obviously, individuals say, I don't want invoice. So this construction companies input credit used to increase, output credit was not increasing at all because they're not showing
That's
sales.
why they removed input tax credit for construction companies.
Construction is not there.
Nirmala ma'am is there na. I don't know about anything, but this and all, she's very intelligent. Very, very intelligent. So maybe she has appointed one team to identify who are all evading.
100%.
No, she took the cement and pasted those loopholes. So it is like, what has happened is that all construction companies are doing this. One shot, one stroke, I'm reducing, like rate is reduced to 7.5% without ITC. Which don't take ITC. And rate was 18% with ITC.
Now it's 7.5%.
Now 7.5% without ITC. Now buyer is thinking there is a reduction in rate, but only we will tell there is no reduction in rate actually. When he is not getting ITC, he will add it to the cost.
Yeah.
So, but
when it came, sir, approximately like
2019, first
19,
April
okay.
2019.
Okay.
Exactly, that was a sixer during election. This elections. So what happened is that this amendment came and every buyer thought, wow, 7.5%, great. So 18% to 7.5%. But this with ITC, without ITC, no idiot will understand here.
Correct.
So
Yeah.
they thought it is like that. They started putting pressure on the builders. Builders literally cried. Their ITC is gone. And customers started putting pressure. Why are you not reducing the price of the flats? So it's like literally it is loss for them.
Correct. Yes.
So guys, see, if you see just 5 lines, so many things are there and beautifully explained by Tharun sir. This is the beauty of IBS. It's any question can come from anywhere. So we need to be very, very careful about it.
And what I explained is only from this aspect, sir. Whatever they asked, these two are really tested here in the question.
No, what I'm trying to tell is, sir, I mean, such a big explanation only for like 3-4 lines. So
exactly. Yeah.
Anything they can ask, like every line we can speak for us is what I'm saying. So they can ask anything under the sun.
Correct.
Which is what I'm done. Yes. So para 3, let me read.
But the intensity, sir, actually no, this is one chapter, sir. This only matched ITC can be taken is one chapter.
One chapter.
Input tax credit chapter. And this rule 86B is actually another chapter, payment process chapter. So actually in IBS itself is conglomeration of chapters.
All subjects.
In that, see, multiple chapters also they are connecting.
Yeah. And in law, I thought only company law, sir. They are giving FEMA, SEBI, there are PMLA, FCRA.
Is there. FCRA.
That's what I'm saying. So, I mean, economic law also they are adding. It was only company law is actually what I genuinely thought before starting the subject, but everything is us. So
maybe if you have to put this on a slightly positive note, I can say like those people who pass this exam and coming out would be better than maybe my quality when I pass the examination.
100%. That is 100%.
Like that, sir. Always in CA it is like that. The fresher is in more demand than the experienced.
Very true.
So because they learn many things, latest things and all. So that's why CAs and all. It's like as you grow older, your earnings will increase. No, nothing of that sort. So people who are younger only they are earning nicely than the old people.
Correct.
So guys, one of you had commented, which we recorded again. I'm just again telling because it's going on YouTube, saying that you have to discourage this subject, and you are. Let's see if one of you can write all the subjects, etc. Or basically, the idea of this entire IBS was each of us are expert in our own area, and we want to come together and learn from each other, and also discuss stuff with you. And I just want to tell you that ultimately this is the truth. You are becoming global chartered accountants. And rather than fighting this subject, embrace it and study. As simple as that. So there's no point in commenting like you only write the exam. Can you write the exam alone? We have already passed. I'm sorry to say, but we have already passed. And as Chinmaya sir already mentioned, you guys are way smarter than us, than we had passed. I always tell it in class. You guys are way smarter. As
And
of
exactly, don't compare with us, because tomorrow
Yeah.
you're going to become successful and you're going to earn lots and lots of money, as if
Yeah.
you're going to pay 40% of your earnings to us. So then why you compare yourself with us? So we are there to provide you as a ladder. We are ladder, always a ladder. So but you are going to climb up. So therefore you think about yours and don't tell like Tarun sir should learn all the subjects and Punarvas sir should all learn. No, boss, I cannot do that. Already see, completely gone. Then what? So there is nothing left here. So please try to understand. Yeah.
Yes, for the fun of it, guys. Yeah. So let me take para number 3 because it has again CSR aspects. So guys, see, we have already finished
Sir,
more
I'll
than.
read this, sir. I'll read. You can throw
Yes,
some light.
yes, sir. Yes, sir. Please go ahead, sir.
YPL provides donation every year as a part of its CSR activities.
Hmm.
A charitable trust named Siksha Kalyan Trust. So about this CSR, Punarvas sir will throw some light
Yes.
because already we did one case study.
Yeah.
In that, in detail, we have covered CSR, but few aspects of that CSR will be touched upon. Engaged in activities of providing education to poor children. The average net profit of YPL for the past 3 years was 88 crores. Accordingly, during current financial year, that is during financial year 23-24, it made a donation of 2 crores to SKT as its CSR spend. SPL, it's a subsidiary. Okay, so I will stop up to this.
We'll stop here, sir. So good. So first of all, CSR is given in section 135 of the Companies Act. So as per 135 of the Companies Act, I mean, this was one of the sections which came in 2013, which created a hue and cry that time. So as per this section, it's very simple. You have to spend, it is mandatory for you to spend at least 2% of your average net profits of the past 3 years. So in this case, they have given that past 3 years profit as 88 crore. Now, if they had given the 3 years profit separately, you need to add all the 3 and divide it by 3. That's it. Now, what if there is a loss is one more question. You need to consider the loss because income includes loss as well. So basically this 88 crore will be the average profits after adding, subtracting income, losses, everything and divide by 3. This is the average 88 crore. So as per CSR provisions 135, you need to spend 2% of 88 crore, which comes to roughly around 1.82 crore, which they have done. If you see, accordingly, during current financial year, it made a donation of 2 crore to SKT as its CSR spend. That is fine. They have to do it. Every company has to do it. Holding company has to do it separately. Subsidiary company has to do it separately. It's not like for entire group company I will do. Based on your standalone profits, you need to do. So this has to be done. That is one point. Second point is CSR can be done through various NGOs, or you can have your own companies, and that is called Section 8 company. Under company law, if you register a Section 8 company, it is a charitable organization where you can definitely carry out the CSR activities through these Section 8 companies. Or, I mean, you will get the deduction either this, or you have to register under 12 capital A of Income Tax Act, where you will get a ATG certificate to do all those activities. Now, what will be called as CSR activities? We have a particular schedule in our Companies Act which speaks about what are all the CSR activities. So it can be poverty alleviation, it can be, in this particular case, education to poor children, sewage and environmental protection. So many things are there. Based on that only, we should do CSR. These one-day activities like your TCS has this one-day run, one-day marathon, all this will not be covered. Similarly, if, for example, if I have a solar paneling, Chinnaswamy Stadium has done solar paneling for the entire stadium. Though it has spent only for itself, it is actually saving electricity, and the electricity is being used to electrify 2 villages in Kolar, KGF, Kolar Goldfields. So basically, essentially, you have to see the facts of the case. All these will be CSR. So in this question, that has happened. Now, can I also take money from outside, donation from outside and do it? Yes. But should I spend money outside? In the sense, can one company in India spend money outside India? Can I donate it to some Singaporean trust? That is not possible because CSR, you have to endeavor to obviously spend in India. Objective is India only. That is the reason why CSR came. So in that regard, this entire provision they have given. So 88 crore into 2% is roughly around 2 crore, which they have already spent. Mind you, 2 crore is minimum. Can you spend little more also if you want? Yes. There is also now slightly carry forward benefit, etc. will be given. you can carry it forward to many. We'll see that here that is not relevant now. Apart from that, can you like spend less? So can I just spend 1 crore is the question. The answer is no. For that also there are provisions where you need to.
What would be the consequence if I don't spend? Just want to understand like.
So earlier, now there is a fine. Earlier, this fine came just 2 years ago. Earlier, it was just either comply or explain in the notes to account, explain in the board report. Explain in the board report. So now there is a fine and also there is a general penalty clause of 50,000 rupees if you don't do it. Apart from that, there's nothing much.
No, because if I have to spend 5 crore, maybe beneficial to pay fine itself instead of.
So when this provision came, no, the person who was laughing at this provision was Ratan Tata, because Ratan Tata ji actually donates almost 40-50% of his company's thing into CSR anyway. So this 2% is peanuts. But then if you don't spend this 2%, it will obviously the companies will lose space, because I mean in the capitalistic economy you are earning so much, can't you just donate 2% back to society is the question. So they are telling you let's say if you run a hospital, it's okay for your employees also and for outsiders also, no problem. But try to donate is what this section, the intention of the section is, you have to do it. Though there is no hard and fast rule, but now of course fine is there, but it's peanuts. So as you said, it's a few lakhs of rupees. So even if you don't spend, you can pay that lakhs and close it. But yes,
so it's more of a non-finance impact than a financial thing to be looked at.
And more of, it may impact financially also indirectly, because
brand gets
brand
yeah, the brand overall otherwise, yeah, but yeah, as such it's not a decision on which is beneficial.
Yes, I just wanted to add one point. So usually in input tax credit in GST, there is something called as blocked credits. So which means on certain expenditures, even though it is business expenditures, the GST paid cannot be taken as input tax credit. And Finance Act 2023, they made an amendment. So wherein this particular CSR expenditure under 135. So in this case, they are making a donation. So, but usually they can spend money for CSR. When they are spending money, means they can procure certain things. Say, for example, if they want to distribute some clothes or certain things to the poor people. So for that, they will procure. On the procurement, there might be a GST component. So that GST component cannot be taken as credit. In tax credit cannot be taken. And whether it's a business expenditure or non-business expenditure, we don't have to probe into it. So simply they have kept it under block credit. Yes. So
and also one more thing, in income tax, if I make a spend of this 2%, like in this example 2 crore, will it be allowed as a deduction? The answer is no, because if I allow it as a deduction, it will be like, what do you say, subsidizing the donation. I am paying to 2 crore and then taking it as an expense and earning 30% tax benefit out of it. So CSR spends are not what do you say, allowable.
It is a form of tax itself, we can say.
Correct.
CSR is another name for tax.
Not
so
benefit. The same point in income tax also, you should not earn any benefit. GST also, you should not earn any benefit out of it, which means completely it should be like purely donation out of heart.
Yeah, basically means when you say donation, don't expect anything back.
Correct.
That's the meaning of it. Yeah.
So in 21, I think there were some provisions were changed also. I told you a couple of years ago, where they told even officer in default, that is all the directors, the CFO, etc., they also will be liable. They have to transfer like 1/10 of the amount which you have not transferred to a separate fund. All those provisions came. But ultimately, as you said, if a company has to spend 200 crores, with a mere few crores, etc., you can escape this. But yeah, the objective is what we need to see.
Yes.
So in that regard, what they have told here is SPL, it's subsidiary company. Subsidiary company also wants to, Singapore company also wants to make a donation to such trust in India during the same financial year now. However, SKT certificate of registration, SKT is that Shiksha Kalyan Trust, they're doing it through a trust. That certificate of registration under FCRA, because now what is happening, the Singapore company is donating money to this trust, SKT. So obviously when money is coming from outside India to our country, you have to follow a law called FCRA, Foreign Contribution Regulation Act. So FCRA was initially inserted in 1976, immediately after emergency by Srimati Indira Gandhi.
Syllabus, sir?
Yes, sir, it was there in the old law, paper 4. Little bit was there, hardly they were asking, but it's very, very important law even for our future as well. Even
but is it there in SPOM, that the SPOM set?
In SPOM, very little is there. It's there.
But so syllabus wise, There, so we can't say out of syllabus. It is
No,
there.
definitely.
Okay.
Basically, if you study IBS, this one, you can easily finish SPOM. Or if you finish
Okay.
SPOM set A, if you do the classes and all that, then you can easily, handle these issues. Now, this is one question. They can give any question under the sun for CSR, right? Sorry, for FCRA, under FCRA.
Okay.
So you need to be careful. So if you see FCRA 2010, but initially it came in 1976, immediately after emergency. The reason why it was inserted only is different. That time, I mean, just to give because it's important in the context. So that time, of course, the country was controlled by CIA and KGB, CIA being the Central Intelligence Agency of USA and KGB of Russia. So basically, KGB was supporting Congress at that time. So Indira Gandhi did not want any money to come from CIA, from USA to India to support other parties like the Jan Sangh and all that. That is the reason why she came about with FCRA, where complete prohibition of money except where it is approved. So all the registration was given only to companies from Russia, honestly speaking. But over the years, it has gone through so many things, and both BJP, Congress, all have tweaked it to their advantage. And now we are standing at FCRA 2010. The main objective being that any foreign fund should not be used for conversion activities, religious conversions, and also for prevention of this terrorism. Terrorist activities should not happen. That's the reason why it has come. So all these NGOs, etc., have to register with the FCRA authority. Have to get yourself registered. Registration will be valid for 5 years. Now, can you renew the certificate? You can renew the certificate when before 6 months when it is expiring. So it's expiring at the end of 5 years. At 4.5 years, you can do the renewal. The renewal also will be for 5 years. But if you miss that thing before the expiry, if you miss it out, then you will have to do some other procedures, etc. One major change which has not been given in this question, but they can ask it, is can one trust, for example, Shiksha Kalyan Trust, can they take money? It is a registered entity. Can it take money? Yes, it can if it's registered. Now, can it give the money to one more registered institute? Let's say Chinmaya Trust is there. Can I donate that money to Chinmaya Trust? The answer till recently was yes. But there was a huge amendment where they said, the section 6 and 7 of FCRA, they said that a registered entity cannot transfer money to any other registered entity also. So it is barred now. It is not possible. So earlier it was allowed, now not possible. Second important change is any money coming into India of all these trusts should first come into account maintained in SBI Delhi branch only. Delhi, they have given a main branch. SBI main branch Delhi, all NGOs should register the account there. Open an account there. Money should come only there first. From there, you can divert it to all your other accounts which are registered. So that also government wants control as to where the money is coming from. So during COVID, this amendment came and it created a huge problem because, as you know, SBI, the other name is Sleeping Bank of India. So they were not opening accounts only. So we could not get donations from outside to help Indians in COVID. So people, NRIs wanted to donate a lot of money to the country, but through NGOs, but it was not possible to do so. Anyway, in this,
one idea is that even the Swiggy delivery boy went to deliver the food to an employee there, and the employee told, now it's the lunchtime, come later.
Lunchtime go, yeah. That is SBI, Sleeping Bank,
They
Bank of India. So SBI is my favorite example in classes because any case law you see, first will be the petitioner will be SBI.
Yeah, from Harshad Mehta case, I think.
From Harshad Mehta, always SBI. Wherever, even in IBC, Insolvency Bankruptcy Court, the main financial creditor will be SBI. So that's how it is. Anyway.
So one question, will that renewal fee or the amount you pay, will it be significant? Because if I think from accounting angle, should I recognize over 5-year period or 1 year?
5,000 rupees. 5,000.
Okay, I think then it will not be much of thing to.
Yeah. So here, 20th December 2023. So basically 6 months before only you can do. December means like what? What would be 6 months? August, September, October, around August, July, August. You can, from there only you can start. But if you don't do within that time, gone. And you had not applied for renewal of certificate before that, as the head accountant believe that they could apply for renewal within 1 year from the expiry. Now this is wrong. He has created his own FCRA. That is the problem. And hence, pending or the trustee decided to make an application for renewal, so the trust can accept donation, and the same was done as per relevant legal provision. So of course, you need to pay that 5,000 rupees and all that. And there are some couple of forms you need to fill and you have to get the registration done. So regarding that, the same question is there. We are actually discussing the answers also now, honestly. So that when the questions come, we'll quickly finish it off in like
Go through
30
it, right.
seconds.
Yes, yes, yes.
Moving ahead. Para 4. Maybe Chinmaya sir can read because I think it's fully related to GST.
No, it is GST. I can read it. Yeah, I'll
Yeah.
read. So YPL bought a machinery from Dusham Limited for its business, for which YPL received a government grant of 6 lakh. I think FR also will come.
FR is also there, yes.
Yeah, for a government grant of 6 lakhs. The details machinery are as follows. List price of the machinery exclusive of tax and discounts. Corrugated boxes used for packing the equipment not included in the price above 60,000. Discount of 2% offered on the list price of the machine recorded in the invoice of the machine. As part of its policy, YPL depreciates its plant and machinery at 20% on straight line basis and also does not claim depreciation on GST component included in the price of plant and machinery. I think Tharun sir can explain first, then I'll put the FR element of it.
So first, with respect to this GST perspective, YPL bought the machinery from Dusham Limited. Means Dusham Limited is the seller, YPL is the buyer for its business, for which YPL received a government grant of 6 lakhs. So here, seller has not received the grant, buyer has received the grant. So therefore, from the GST perspective, there is no issue. Because GST implications, this is like a subsidy. Actually, grant in accounting, it is called as grant. But
it is grant, but the better name is subsidy for things like buying electric vehicles or buying solar panels. They might give those
subsidy.
kind of things.
So usually what happens is that electric bikes, or as you rightly said, electric bikes or electric cars, when you are buying, so the dealer will get that subsidy from the government. So that is this. And but here, surprisingly, the subsidy is not received by the seller. The subsidy is received by the buyer. So this is not going to have impact on the valuation under GST. So the valuation part wise, if you see, the 6 lakhs is irrelevant. The details of the machinery are as follows. List price of the machinery exclusive of tax and discount is 30 lakhs. So this will be taken as the base price or the transaction value. So this will be taken as transaction value under section 15 subsection 1. Corrugated boxes used for packing the equipment. So usually packing expenses are incidental expenses. Incidental expenses should always be included in the value. And moreover, it is incurred before delivery of the goods. So definitely this should form part of the value for payment of GST. But in the given price, it is not included. So we need to add. So we need to add this 60,000. And then discount at 2% is offered on the list price of the machine. So this discount is duly recorded in the invoice. As it is given that it is duly recorded in the invoice, means it's a pre-supply discount. The discount is given before or at the time of supply. So like a trade discount. So this is a case of trade discount and it is allowed as deduction. If you remember, Chinmay sir was telling one point in previously, like a person is selling for 100 and instantly they are giving a discount of 40. 40 rupees is allowed as deduction. So which means in this case 2%. So this 2% we need to reduce. So which means 30 lakhs into 2%.
60,000.
Like 6,000?
60,000.
60,000.
Yeah. They made that numbers easy so that it's easy for FR calculation later.
Okay, 60,000. As a part of its policy, YPL depreciates all its plant and machinery at 20%. So this is actually another part. The valuation is complete here. So 30 lakhs plus 60,000 minus 60,000 means 30 lakhs will be taken as the value here. Value of supply will be 30 lakhs.
So when will the subsidy be added, sir? 6 lakhs?
No, sir. That's all. The subsidy actually not received by Dusham Limited.
No, if it was received by them, then?
If it is received by them, then this 6 lakhs also will not be added because the 6 lakhs is subsidy from central government or state government.
Okay.
Subsidy from central government or state government not treated as consideration.
Okay, sir. Okay.
But
so basically, you give them
on the price. While deciding the price, they might have not considered this subsidy 6 lakhs. So they would have fixed the price 30 lakhs without considering this subsidy. So as and when the subsidy is received, it should be reduced from 30 lakhs. Then the value would have been 24 lakhs.
24 lakhs. Got it. So, but it's also same thing, sir. Any subsidy you should subtract from the actual cost of the asset.
Correct. So here as it is not received by Dusham Limited, so 30 lakhs will be taken as the cost of the machine. There is value of the mission on which GST will be computed.
Okay.
And from the buyer point of view, as buyer is purchasing it for 30 lakhs plus GST, so it has not claimed depreciation on GST component, which means this GST can be taken as ITC. So because one restriction is there, 16 subsection 3, while computing depreciation as per Income Tax Act, Block of Assets Method section 32, if depreciation is computed on GST component, ITC will not be available.
Correct.
So
Correct.
that they are not claiming depreciation on GST component, which means they can take ITC. That is this YPL. Then YPL has got this 6 lakhs as subsidy. What is the treatment of this 6 lakhs of subsidy received by YPL? This is treated like donations.
Okay.
Donations, because it is like they are not having any activity for getting this. So it is like a unconditional donation.
Okay.
And not be treated as consideration. So there won't be any GST impact in the hands of YPL on the 6 lakhs. So just they will recognize this income for accounting point of view or tax point of view. But GST wise, there is no issue on the 6 lakhs.
And since YPL has received, it will be reduced from the actual cost for income tax purposes.
Yeah, then I will. But can they claim GST? Is it allowable? I mean, just for the knowledge purpose, they can claim immediately. That is also there.
I didn't get you, sir.
No, if they want to claim GST input credit,
immediately they can take. Once upon a
Immediately.
time, it was like 50%, 50% like that. But
okay.
now on capital goods also in the same
Immediate.
category,
Okay.
same month fully they can take. So the advantage is many companies which do not want to pay the liability, what they are doing is that they are making the capital expenditures in those months where they have liabilities, so that they can use the
set off something. Yeah, okay. Yeah, but 1% they have to pay. that the donation part they have to pay. But anyway, yeah, okay. Yeah, what to put out this one? So GST, they say,
need to throw some.
Yeah, no, in GST they're telling if you don't claim depreciation, then GST is available.
Correct.
But in accounts, they say if you don't claim GST, then we can provide depreciation. So we don't know which decision to make first.
It's like hand in
chicken or the egg situation.
Yeah, they are consistent, but we don't know which decision to make it first there. Okay. As far as the accounting part is concerned, it's very simple. Again, regarding the GST input credit they're taking, so it's not part of the cost, and we don't provide depreciation. List price is 30 lakh. Discount is 60,000, so we'll subtract it. And these boxes which are expenses incurred will be capitalized, because until the asset is ready for use, all the carriage inwards, insurance, clearing charges, customs, everything we will add. So basically it becomes 30 lakhs plus 60,000 minus 60,000. Effectively it becomes 30 lakh only. Depreciate out 20%. Now as far the grant is concerned, Ind AS 20 is same as AS 12. So Punarvas sir told that for the purpose of income tax, you subtract the grant from the asset, and you provide depreciation for the remaining amount. As far as accounting is concerned, they will give you choice. You can show either of the policy. Policy 1, as just Punarvas sir told, 30 lakh minus 6 lakh. So on 24 lakh, you provide the depreciation over 20%. That is remaining 5 years you provide. The depreciation will happen. That is one choice. The second choice is you show the asset at 30 lakhs only, and you provide depreciation on 30 lakh over a period of 5 years, 20%. Another one is grant you receive, you maintain a separate account called as deferred grant account. So you maintain one asset account and you maintain one deferred grant account, essentially liability account. And in the proportion of depreciation, it goes to P&L. The deferred income also goes to P&L. Mathematically, you see it has no impact, because 30 lakh, if you apply 20%, you get 6 lakhs.
Correct.
And if you apply it on 24 lakhs, if you calculate 20%, I think you get 4.8 lakhs. Yeah, 4.8 lakhs. So 4.8 lakh is net depreciation. If I show gross method, overall depreciation is 6 lakh, 30 lakh into 20%, 6 lakh. And this 6 lakh will be spread across 5 years, which is 1,20,000. 6 lakh minus 1.2, that also comes to same 4.8 lakhs. So overall net to net basis, profit is not impacted, but balance sheet reporting is different. So one my option, you show 30 lakhs and 6 lakhs separately. Second option, 30 lakh minus 6 lakh, you show it on net basis 24 lakhs. But ultimate impact on P&L wise, it is same.
Would
the
there
choice
be
you have
deferred
to make.
taxes impact also, Chinmay sir?
No, deferred tax would not come because the income tax, I mean, profit before tax will not change.
Right. So it is the same, correct.
The net expense would be same. So 6 lakh depreciation you show and 1 lakh 20 the deferred income you show. So effectively 4 lakh 80,000 would be the impact on P&L account. So whichever policy you adopt in the report in the notes to accounts, you have to mention that company followed the method of net basis or the gross basis.
Right. So, I mean, I
Okay.
generally ask students whether what's the difference between, I mean, for example, I ask is depreciation an accounting principle or a policy? So many
Yeah.
people tell it's a policy. Actually, it's a
Yeah.
principle. It's a rule. Policy is the method of applying that principle. So even to qualify simply to teach them, I say, tell me, is depreciation an accounting policy or principle? Most of the time they say it's policy because that's what we know. But the
I'll
method
tell
of
one more
applying
thing.
that, yeah.
No, now things have changed one more level. It is neither principle nor policy. For Indians, it has become an estimate.
Okay.
So the accounting policy is the cost model, revaluation model. So if
Okay.
you change from straight line method to WDV, whenever you change an accounting policy, we used to do something called as retrospective method.
Retrospective effect.
Correct.
Even now it is there when you change a policy. But because this is not a policy, they call accounting estimate,
Estimate.
no retrospective accounting.
Okay. Okay.
Change from straight line to WDV
But I remember I did this retrospective
in
calculation.
foundation maybe.
Straight line, foundation, and we
Recalculation.
that.
Now
So,
things is very simple. It's
Yeah.
all prospective changes. Whatever happened, you forget, you start fresh. Going forward, you do.
There is
Unless you go
no
cost model to revaluation model. That is a retrospective effect.
no point crying over spilt milk. So let past be the past is what the concept is.
Yes. They made it as accounting estimate. I mean, it's in a way true, but yeah, that's a different angle altogether.
So friends, as you can see, whatever we discuss is all extempore. We just go through the case study and we don't know what Tarun sir will ask me. I don't know what Chinmay sir will ask me. They don't know what I'll be asking. So it's more of a discussion among friends. That is why we also enjoy because time flies in this. I don't know whether it flies for you or not, but definitely for three of us, it definitely flies. It's because it is, in my opinion, to be honest, one of the best subjects ever. And probably, in my opinion, this subject is the best in CA because everything is included in this. And we also get to know so many things. So many concepts of GST I understood and FR I understood. That's how it is. Each of us, it's a, constant learning for all of us. So you also take it that way, you will enjoy.
On the flip side, by doing this, we don't know whether we may end up in doing practice more or than continuing classes because we know the knowledge. No, we are tempted to use it more in real life as well. Yeah.
Right. Anyway, so the last paragraph is finally, actually, we have discussed all the answers, to be honest with you. We'll just go to the questions later after this last paragraph. I will just take it up, no problem. Last paragraph goes like this.
Sir, I'll read, sir. Actually, it is related to income tax. I'll read.
Oh, okay, sir. Okay, sir. Go ahead.
But some CAF and all is there.
Now that sir can throw light, CIF, that so many things in, I think IDT we use that CIF and all.
Yeah.
Yes, sir.
On 24 January 2024, YPL supplied 2,000 metric tons steel pipes to SPL at 1 lakh per metric ton on CIF basis. CIF is cost, insurance and freight basis, which means I have collected money even for the insurance and freight. So means I need to deliver the product to the customer in his port. Insurance and freight of 11,000 per metric ton were included in it. Also, on 5th February 2024, it made a supply of 3,000 metric ton steel pipes to another Singapore-based company, Uno Pte Limited, UPL, at 95,000 per metric ton on FOB basis, for which the payment was to be made of Singapore dollar 5 crore 70 lakhs in 3 months. And so in order to protect itself from exchange rate fluctuations, YPL hedged receipt of such foreign currency in the forward market. So let me complete the customs part and then Punarvas sir can share the income tax. Actually, transfer pricing will come. So these two are connected here. So first from customs point of view, if you see, so YPL, and actually there is no question related to this in customs given in this case study.
But they can ask.
Can be asked. So YPL and SPL are related. This is the first point discussion we made in the beginning. That is, they are related under each and every subject. Right. So on customs also, they both are related because they are holding and subsidiary. Now, between related parties, whenever the transaction takes place, we will not consider the price at which the transaction takes place. So in this case, this CAF, whatever they sold is irrelevant. So we go for the comparable value method. So under customs valuation rules 2017, in case of export, there is something called as comparable value. And this comparable value is actually the same in income tax because
Cup method.
the comparable
Cup method, uncontrollable price method, cup method.
the same method, cup method is here, but while doing the comparable method, the difference in the price needs to be considered. For example, here they are selling on CIF basis, but the comparable transaction is on FOB basis.
FOB basis, yes.
So then in that case, what we need to do is that, so we need to take the comparable value as FOB only for the purpose of customs. For the purpose of customs, we need to take FOB because in case of export, the value will be FOB value. But in income tax, it will change. Income tax, it will change for the purpose of customs. FOB value only will be taken as the value for payment of customs duty. So that FOB value in this case is 95,000 per metric ton, and on that applicable customs duty is computed.
Okay.
Applicable customs duty is computed. So whatever, but depends whether the export is chargeable to customs or not, depending upon this product. If the product is chargeable to customs duty, we need to pay customs duty. Otherwise, we don't have to pay customs duty on this because, as we know, majority of the products exported from India are not leviable under customs. Only few, like some 50 entries are there. Only those goods are chargeable to customs duty on export. So it depends because as they have not given any rate and all. So, but maybe they give rate on this, we need to pay customs duty. And depending upon number of metric tons, so they have given 2000 metric tons, so 2000 into 95,000 into the customs duty. But remember, only basic customs duty is payable if applicable, and we have many additional customs duties like social welfare surcharge, CVD, SAD, etc. and all those things will not be applicable. Only BCD is payable. So that is about customs part. Yes, sir. Punarvas sir, over to you.
Before I'll just I'll just add one small 2 points because they said they have used the forward market for hedging.
That's why I wanted to ask you that question. Yes,
cover that point. Anyway, they are talking about buying of the Singapore dollars, which is going to be fluctuating. So they have taken a decision to buy in forward market. So they would have entered into contract to buy Singapore dollar at a fixed rate, maybe like 30 rupees, 35 rupees, something like that. And if they ask you how much payment is going to be made, very simple, whatever the Singapore dollar multiplied by the forward rate, that would be the outflow of it. But sometimes what they tell you is they will not give you the rate directly. They will give you one Singapore dollar is 30 rupees hyphen 31. So you have to choose whether which is higher one, because you're buying, you will be buying at a higher rate, being a disadvantaged position. So you will buy at 31 rupees. But if they are given 1 rupee equals to, in those cases, remember, you should divide, and dividing, you should take the lower rate as the higher rate. Meaning, if they're told 31.1 or will not give 30.1, they'll give decimal 0.10 or 0.12. So 0.10 is the lower number. 0.12 is higher number. That will be lower.
That will be lower.
1 by 0.10 is the decimal wise, it is lower. So when you divide, it will be higher number.
Right.
So when you take a indirect code, that would be the rate.
That's what I learned as 1 by bid is ask and 1 by ask is bid.
I usually don't use that method. I use the method of called as left hand side, right hand side. If left hand side currency is there, you multiply. Right hand side currency, you divide. Like if they give $1, Singapore dollar is rupees. That is left hand side. Singapore dollar is left hand side. So I multiply. If it is 1 rupee, so much Singapore dollar is right hand side. So you divide. So depending on that left side, right side, because they use something called as no, they use word called as home currency and foreign currency. Some different approaches. Now the question comes, in the institute will not give dollar and rupee. They'll give you UK pounds and euro. Now which is foreign, which is local? So the left hand side, right hand side is the approach I follow. And one more point, in all the question here, para 5, they've used empty, which is happy. In one of the AFM question, they gave you The contract is 1 metric ton is so much, but the information said it is selling at 10 rupees per kg.
Okay.
So you should know how to convert a metric ton into kg.
We'll write, assume MT is equal to kg.
So 1 metric ton is equal to 1000 kg. So be aware of it. That also might be tested in
Let's
some
write down
places.
that actually. Yeah. Good
1
point.
metric ton is 1000 kg. So keep it in mind. Everything is expressed here empty. So you are safe in that sense. Yes, sir. Punarvas.
Marks will be empty then if you don't write. Yes.
Okay.
Okay. So guys, so this is about 92 CE of the Income Tax Act that is relating to transfer pricing. Let's go down. Thank you, sir. So this is how it is. So basically, if you have an Indian company and foreign associated enterprise, here is an associated enterprise we have already established in the first initial discussion. So if the transaction that they're doing is not within arm's length price, so you know what is arm's length price? Basically, it is like two the companies which are not related to each other. If they had done that particular transaction, whatever that rate would be called as the arm's length price. So basically, the other company in this particular area, let me go up. So this is a unrelated company. They made a supply to another Singapore-based company at 95,000 metric tons. But since it's FOB, we need to add that portion also. We'll do that. So basically that would be the arm's length price, but here it will not be on arm's length price. So technically 92C is telling that if the transaction is not arm's length, let's go down 1 second. The transaction is not arm's length price, because of which it's resulting in what? An increase in the total income or a reduction of loss. Increase of total income or reduction in loss. Then you have to apply, you have to make an adjustment. You have to make an adjustment, and that adjustment is called as primary adjustment. You have to make an adjustment in the tax books, that is called primary adjustment. So this is basically your arm's length price minus the transaction price only if it exceeds 1 crore. This is most important. If the difference between the two exceeds 1 crore, only then you have to make a primary adjustment. You have to make a primary adjustment. Now, if this is more than 1 crore, just to balance the entire books of accounts of the associated enterprise also and the SSC also has to be, there is an imbalance. I have to remove the imbalance. To ensure that that imbalance is removed, I also need to make a secondary adjustment. And mind you, secondary adjustment will come only if the difference is more than 1 CR. Otherwise, it will not come. The difference is more than 1 crore, then secondary adjustment has to be made. And that too, what? If at all, first of all, it should exceed 1 crore. Second, if extra money is lying outside India, I have to bring it back to my country. That is our object. Nirmala madam wants money. So if the money, because of all this golmaal dealing that I'm doing, I am not paying tax here, but the extra money is lying there. So Nirmala madam says that adjusted amounts, whatever adjusted amounts has to be brought back. That is the difference has to be brought back. It has to be brought back within 90 days. That is a prescribed period. If it is not brought back within 90 days, then it is like the Indian company has given a loan to the subsidiary company. It is deemed to be a loan. It is deemed to be a loan. So the Indian company has given a loan to the non-Indian associated enterprise, and I have to charge interest also. Interest also will be added in the entire tax component. So this is the gist of the story here. In this particular question, let us check here. So here, again to recap, SSC is required to carry out something called a secondary adjustment when the primary adjustment of transfer price exceeds 1 crore rupees. Simple. And the second part is the adjustment should be made because this amendment came in 2017. So the adjustment should happen after assessment year 17-18 onwards, because you cannot make any retrospective amendment which will inconvenience the SSCs. So it was made a prospective amendment. So because of the result of this primary adjustment, if there is an increase in the total income of the SSC or there is a decrease in the loss, whatever it is, the excess money has to be repatriated back, has to be brought back into the country. Now, in case you don't want to bring back, because I have to again follow FEMA regulations and RBI regulations, if it is not possible, then the Indian company, SSC company, has an option to pay, I'll just write down for the excess portion, 18% tax. 18% tax plus surcharge is mandatory, 12% surcharge plus 4% cess. So overall, if you compute, it will come to, if I'm not wrong, around 20.9% or something, 99%, 21% almost. So that you have to pay tax on the excess. In case you do not want to bring it back to India, you need to do it. So in this question, both YPL and SPL, as discussed initially only, are definitely associated enterprises. And the similar goods are also sold by this YPL to one more random company, unrelated party. That is why, as sir also mentioned, which is whatever there in customs, I used to use something called as comparable uncontrolled price method, or popularly called as the CUP method. I'm unable to write. Okay, it's okay. CUP method, popularly called as CUP method. So maybe sir can write that. So it's CUP method, comparable uncontrolled price method. So basically, the price in a comparable uncontrolled transaction, it has to be adjusted for the difference. So in this question, the price per metric ton is 95,000. And I have to adjust to what? Because I have to bring it to arm's length price. I have to adjust because this is on CIF and the other one is FOB. So if you see 95,000 is what is to the unrelated party. Sorry, there is some problem here. So unrelated party is 95,000, right? This is on FOB. I need to bring it to CIF. So I have to add what? 95,000 plus the freight. Sir, can you please write? I'm unable to.
95,000.
95,000. That is the rate to the unrelated party. That is at FOB. I have to bring it to CIF. So I have to add
11,000.
11,000. I have to add 11,000 per metric ton. So it's coming up to 1,06,000 per metric ton. 1,06,000 per metric ton. Into basically you have 2,000 metric tons, guys. So it is coming up to what? Now I have to see the difference. We will just hold on to 1,06,000. There it is 1,06,000. Whereas here, if you see, I mean, actually the price should have been 1,06,000, but I am supplying to SPL at what rate? 1 lakh.
1 lakh.
So basically, arm's length price should have been 1,06,000 and not 1 lakh.
Correct.
So the difference is 6,000
is the shortage.
6,000 per metric ton is the shortage or the excess which has to be collected into 2,000. Into 2,000.
Okay.
So if you do that, it comes up to 1.2 crores.
Yes,
1.2 crores. And
Which
as
is-
discussed initially,
Which is
the
1 crore.
yes, it is more than 1 crore. So definitely primary adjustment gets attracted. And now I have an option. Either bring back this excess within 90 days, or if it is not possible, pay tax at 20.96%. 9664, not 99, 20.96 it will come. 20.9664%. 20.9664%. You pay the tax and close the deal. So on
this 1 crore 20 lakh.
on 1 crore on this thing. What is that? 1.2 crore excess.
Yeah.
On 1.2 crore, which I should have received, I'll have to pay a tax. So no need to keep that money there only, but you pay this tax. Nirmala madam wants the tax. That's all. She doesn't care about the money coming in. So 1.2 crores into 20.9664%. If you do, it will come up to around. That is the first question, dear friends. That is the first question. So the first question answer would be option number B then.
Should we explain the 20.64? They understand.
Which one?
That the 20.64 they understand the tax rate, or should we?
Yeah,
show
I
them
explained. No, it is 18% plus 12%.
I know, but it's 18 into
Okay.
1.12 into
18 into
1.04.
12%. That I think at this level
They'll be able to follow it. No?
Yeah,
Okay.
because they would have done DT also and everything, and even
Hopefully.
I think IDT also is like the same only.
Sure.
So yeah, that they'll know. So 12% of 18%, and whatever you figure you get on that 4% you add. So it will come up to 20.9664. So if you do the math on that 20.9664% of 1.2 crore will give me option number B as the answer.
15,970.
Yes, sir. 25 lakh 59. So guys, we have already discussed the question answers. Quickly, we'll finish off. Second question. Second question is also related to me only. We'll read it quickly and I'll finish it off. There is some now everything is going haywire. Yeah. Second one. Yeah. With reference to information given in para number 1, whether any formalities would have to be complied by YPL. Guys, I already discussed as per section 188. It is office or place of profit and it is more than 2.5 lakh rupees. I told you in the holding company, you have to pass a ordinary resolution. And because Sunita happens to be a related party of the holding company, because she is the daughter of the managing director. So option number A is wrong. Option number C is wrong. Option number D is also wrong. You have to comply for sure. So option number B is the answer. Yes. As Mrs. Sunita was a related party to YPL and she would be drawing a monthly remuneration exceeding 2.5 lakh in a subsidiary company, formality should be done in YPL Limited. And what is that YPL formality? Ordinary resolution. Board resolution will be passed anyway. Ordinary resolution has to be passed and then that has to be done. Sir, third question is GST, sir.
Yes, sir. So in the third question, with reference to the information given under para 2, how much balance in electronic credit ledger would be available with YPR after discharging its GST liability for the May month, for which Mr. Kailash was consultant. As we already discussed, so their liability was some 110 lakhs and they had some credit. So, but this 110 lakhs, they have to pay 1% through cash ledger, which is 1 lakh 10,000. So remaining 99% they will be paying using credit ledger. So that will come to the remaining, that is, so that is 108 lakh.
Yeah, 90,000. 90,000.
110 lakhs
Yeah, 99.
into 99%. Yes, 108 lakhs 90,000. So this 1 lakh 10,000, so 108 lakh 90,000, and they have got some credit. So that credit also we have seen in that some opening balance, some 60 lakhs plus some 57 lakhs.
50.
So that is the credit. So the answer I'm just showing you. So here, yeah, yes. So they had a credit of 56 plus 60, 116. So but 108 lakh 90,000 only they can use from the credit. So the balance will be 7 lakh 10,000. So that 7 lakh 10,000 will be the answer for this. So which already we discussed. So
okay, this is as per the GST records, right? Because as per accounts it will be different.
Accounts it will be different as per GST records. So this is the balance in credit ledger. But clearly they asked electronic credit.
It will be for GST on this.
Electronic credit ledger is a ledger which is maintained by GST network on behalf of the registered person. So we will maintain input tax credit ledger. So that is for accounting. This electronic credit ledger they will maintain. So therefore, definitely it is as per GST records only. Then this question, fourth question.
FCRA, sir, I'll read out. With reference to the information given under para 3, till what time period? I told you it can be done 6 months before the expiry.
Yeah, 5 years and 6 months. Yeah, that's the thing. Yeah.
So option B. Option B is the answer.
6 months before the expiry. December expires. So
we filed with a fee of 5,000.
5,000.
Then
related
to machinery. What is the value of supply of machinery? Already we did the computation. It will be 30 lakhs.
That is 30 lakhs.
30 lakhs 60,000. The 30 lakhs plus 60,000.
Minus 60,000.
Minus 60,000. So that will to 30 lakhs.
30 lakhs. Yeah. Same thing like accounts there. Yeah.
Descriptive questions.
Sir, first two questions is auditing, which I have actually explained fully during.
So and the last question, Chinmay sir,
yes.
Can take the last.
Yeah, with reference to the information below, show the statement of profit and loss and extract of balance sheet in respect of grants. So two methods we discussed. Either you can show it on gross basis, net basis. The same thing they are showing it here. So when the government is, when the government grant is treated on gross basis, you can see here depreciation is charged on 30 lakh 20% without taking grant into consideration. Then the grant was 6 lakh. It's spread across 5 years. So that's how they got 1,20,000.
Right.
So it is in the same proportion as with respect to depreciation. Just one small point here is because it was straight line method, you can simply divide by 5. What if it was WDV method? You can't apply that rate here. So you have to calculate under WDV method, year 1, what is depreciation, year 2, year 3, year 4, year 5. In this proportion, you have to divide the 6 lakh. For 5 years,
you don't have that problem. GST always deemed useful life of the asset is 5 years.
5 years. Okay, that's what they're given. Yeah, here you have to do in the proportion. So as far balance sheet is concerned, okay, a small point, I think you should explain this. Non-current assets, that is fixed assets, 30 lakh minus 6 lakh depreciation, 24 lakh, that is asset minus depreciation. Okay, this one I have to explain. 6 lakh is the amount of grant received. 1,20,000 went to P&L account. So remaining 4.8 lakhs will come in balance sheet. And this 4.8 lakhs, we should divide this into current liability and non-current liability. Current portion, non-current portion. That is because of this 4.8 lakh, 1.2 lakh will come in the next year. Within 12 months, it will hit P&L. So
Okay.
1.2 will be reported as current and
Okay.
balance 3.6 will become non-current.
When
So
we
that
did
will be the-
accounting, sir, we used to show 1.2, 4.8. Kel khatam.
Yeah, that's how
Correct.
it used to close.
Correct,
Now you have to
correct.
break it down. This at least is better. Imagine you have taken a loan. You are paying monthly installments.
Correct, correct.
So the next 12 month, how much loan that will become current, and beyond that it becomes non-current. And you have to take out the interest part and all there. So that calculation part. So that is the non-current 3,60,000, and immediately next year what is likely to come, that is current portion 1,20,000. That is
Yes.
on the part A. If it is the report on net basis, this confusion will not come. 30 lakh is the amount of asset, 6 lakh is the grant received, net amount is 24 lakh, and on 24 lakh you apply 20%, straightforward, 4 lakh 80,000 depreciation, 24 lakh minus 4 lakh 80,000, net 19 lakh 20, no other current, non-current, deferred income, those situation will not
And
come.
we
So
can choose whichever method we want.
yeah, but in exam you have to show both,
Okay.
or you write one and mention that other alternative is possible. Practically, you can choose, you can do either of the methods.
Yes, guys, with this we completed case study.
Finally. Yeah.
Final, which was given in RTP, but actually 4 hours exam, and because we explained a lot of other things, because of which only it will take time. So don't think like we will also take this much time like that, because we explained a lot of other aspects. But otherwise, if you stick on to the question and answer, so yes, in 1 hour definitely you will be able to complete. And there is no clarity about whether we need to give the reasoning for the MCQ. So that they have not given. If it is like, I think it will be like OMR type only, wherein you need to just shade the MCQ options, and descriptive alone you need to write. But let's wait whether ICAI is
Sir,
giving.
but in paper 60 earlier, they had to write in the question paper only, sir. Option and reasoning they were writing that time.
Option reasoning. So then the
So
same.
reasoning also they were
Reasoning.
expecting, is it, at that
Huh?
time? Reasoning, they were expecting
No, they were
reasoning?
giving reasons also.
Okay.
So, but even if reasons are not there, maybe students were just
Because
writing.
in RTP, as they gave it like this with reasoning, so then maybe students also will be required to
Expected
write.
to write the
No,
reason.
that we don't know, because RTP might be to explain us students.
Ah.
Because see, in the RTP at the beginning they mentioned, no.
Suggested answer also will be na. So I
No,
thought.
no, sir. In the first, but the beginning you check, they told topic covered. In the exam, they will not mention like that.
Correct, sir.
So it's also from students' perspective. So answer, we
But
really
yeah, I
don't know.
feel, sir, they will give topic covered. I feel they will
Yeah.
give topics covered, so that the student can be in handy, take the respective section and refer and write. So maybe I
Hopefully,
think they will be giving.
Guys, it's maybe, let us be very clear.
We don't
Tomorrow,
know,
don't
yes,
tell
please.
Tharun sir told this, PJ sir told this. Maybe, we don't know. So it's the first attempt, so we also don't know. But we are doing our best possible, whatever, by discussing all this. So like this in our product also, which we have IBS, we have discussed all the case studies. In fact, still almost 2 case studies are remaining. Everything is done. So Institute has released around 15, plus we are doing 2-3 more. Apart from that, we have the student journal around 3 questions that also will be doing, plus RTP 2 questions. So overall 20 plus case studies. If you do that, and each of them will be 2.5 hours like this. So if you do that, apart from that, we have revision classes also, guys, for each and every subject. FR, AFM, law, everything, some 20 hours like that. So they're only 100 hours over. Plus, we don't have classes for SF, CMP and auditing. So again, don't come back to us saying that is not provided. We're very clear on it. Only few tips here and there we'll give later. So apart from that, we have FR, AFM, law, DT, IDT, revision classes are there, 20-25 hours each. So that only will go up to 100-125 hours, plus this discussion around 40-50 hours. So 150-160 hours, more than sufficient for you to get a beautiful understanding of the entire subject. And as and when Institute releases more case studies, we'll definitely keep doing them. Apart from that, in your books, we have some more extra case studies for your practice, which you can do.
Sure.
Yes.
Yeah,
Thank
I'll
you.
take up maybe the third sir can just conclude. I just add 1 or 2 points. So from the student perspective, I understand that you are following through a difficult phase, and this is challenging. It's a new subject. So what I would recommend is, here or in life, I follow one simple policy. When you don't know what to do what you can. Applying that principle here, there is so much infinite possibility of questions here. We really don't know what to prepare. But what we do, Institute has given these case studies. Let us make sure we prepare these case studies. And if these case studies comes in exam and you are not able to do it, then you don't have any authority to point the finger at anybody else, because this is a defined set is given to you. If the case study comes out of this, then you should not have any excuse. Beyond
Right.
this, in my opinion, this has given you the base with our revision classes, with this much of discussion of the problems, along with possible areas, if you can listen to us, along with the revision classes, with your practical experience, in our opinion, you are prepared enough to face the examination. So I would say all the best, go with this approach.
Tarun sir,
Yes,
with the closing comments.
Yes. Sir, actually, no, what Chinmay sir said is true, because I remember when SCMPE came, ICAI released one case study booklet. So for SCMPE, and in the first two attempts, May 18, November 18 and all, lot of questions came from the case study booklet only, with change in names,
Changes
etc.
will be. And also, sir, questions were changed. The case study was the same.
Case study was same. So therefore, maybe the same, what sir said. So whatever this 20 case studies that is given by ICAI, out of this itself, maybe some 4 case studies like permutation and combination they could take and they might be giving. So therefore, if you're thorough with this and moreover, so based on Punarvas sir's idea, so we are planning for some top 100, and Chinmay sir also gave this idea. So we are planning for some top 100 concepts. So to release it in our YouTube channels as well. So we are in the process, we will do that. And those 100 concepts will cover all the subjects kind of, at least that much you should be knowing kind of things. So yes, we are there to support you. Signing off, take care and all the very best for your preparation. Hope you all made the exam applications. So the due date is I think 25th of February. So all the best for your preparation. Take care guys. Bye.
All the best, guys. Bye.